Hi, Tim Bigham back again this week in cold Chicago, attempting to grow my winter beard here, but certainly the market far from cold. In fact, red hot over the past couple days as the thought of the Fed putting off raising rates till perhaps 2016 reared its head overnight, with Fed Governor of Chicago, Charlie Evans, alluding to the fact that Fed raising rates might be a disaster, certainly with rates at virtually zero. A little bit frightening, in my opinion, the fact that they would, have to raise rates could kill things off, may give pause to the rally at these levels. But the first, time we've really seen this kind of rip-roaring rally after the worst start to the year in history over the past first 5 trading days. So we're seeing big volatility back. The VIX has come down today, although still well above those lows that we saw not too long ago around the 12-13 range. So, looking really at perhaps taking some positions more on just short-term option plays here. I'm actually using a option scanner to identify some unusual option activity. Saw some activity in HALO, H-A-L-O, a couple days ago on the January 11 and 10 calls. Yesterday, that stock popped big post that unusual activity following an analyst meeting, so was able to take advantage of some of those plays. Seeing some also in Best Buy and Wendy's on the February at the money strikes here. So really monitoring how options are being used here to position by the bigger players. And I think it's becoming more and more prevalent. Certainly, names like Carl Icahn, if you look at a lot of the stakes they take now, a lot of it is option-related, option-based. Carl Icahn many times will be long call, short puts, putting on a synthetic long stock position, but using options. For example, in Netflix and Herbalife, he has done that both. So with the market really, making a push again towards all-time highs, although the news coming out certainly of Europe with the, problems rearing their head in Greece, we see Italian unemployment at, historic highs. Be difficult to imagine, given the fact that oil prices are way down, oil company earnings should be, subdued to say the least. Financials, given that interest rates are pushing towards, extreme lows, 10-year below 2 again, the financials will probably have trouble making money on interest, so they may be a little weak going into earnings season. So I just think that this rally may be a little bit unwarranted here, given the veracity of it. So I'm positioning by buying some comparatively cheap at the money puts for next week, selling ones that expire this week in front of that number on unemployment on Friday. So until next week, this is Tim Bigham. As always, keep those position sizes in place and those stops going, especially in this kind of volatile market environment. Take care.